We have a high taken out here.
Yeah.
So right now, we should look for buys inside our swing low. So we have a bearish, we have a buy to sell candle here with the candle B engulfing the candle A and leaving us with space here, which is our fair value gap, validating this other block. So this other block here is inefficient. So what I'm looking out for now is for the market to drop inside this other block and let me get a buy to the upside.
Okay.
I can see some liquidity building up there, which is really good. So I'll just pause it right there. On a normal day, I'll have a buy limit sitting here. And my stop loss really there tight. I don't do big. Then I'll aim for 1:3. Okay, so I see liquidity up here that I can target. I see a trend line building up here. Then I see another block as well. All of this is liquidity. And all of that resistance and all of that stuff up there. There's just a lot of liquidity up there we can target. So let's see what happens. Please don't go up and swipe. Oh, please. You might sweep now these lows here, these two lows here, liquidity. You might just grab this inside this trade and spike up like that. Oh, my connection is really, really messing this up. Oh, did you see that? Did you see that? Did you
Yeah.
see that? Okay,
Yeah.
okay. This is enough. This is beautiful. This is very beautiful. This is beautiful because I was seeing when I saw these two lows here. When I saw these two lows here, I knew that okay, this is liquidity, and if this market is to sweep this liquidity, this is what is going to happen. It will sweep it down, stop everybody out on this trade, tag us in, then spike up. I told you it's going to spike up, and
Yeah.
this is a spike. So this spike here is basically sweeping out. I mean, there's just saturation of orders here, and all of that buy stops that has been taken out. The market now has fuel to go up. So when it has collected all that fuel, it just goes up like that. You can see that beautiful trade. All of that
Yeah.
money. And this is just all we took. Just imagine, because normally you're supposed to like, people take the swing highs. If you go on YouTube, you see a lot of traders, they'll be like, they'll take the last high, the
Yeah.
last swing. Yeah, they do that. But I don't really have patience and I don't have the balls to sit like that and see trade, do stuff. But if you can stick to your rules, you can still do that. It's not like it is a bad thing. But if you want to do that, you have to be wise and smart. Most of them they don't really hold all their positions to that level. So if you have like 3 positions here, or if you have a big position here, you're taking profit partials uh, at every step of the way. You feel me? Like up here, 1:2 you take, 1:3 you take, you break even with your stop losses, meaning you're risk free on this trade. Then you can hold the trade all the way up. So there's no issue with that. For me, I can just take like 80% of my money off the table, then I keep like 20 to run up to these highs, which it did, and it's really, really
Yeah.
good. So we broke down this chart together. You can see that this right here was a very, very good setup because all the rules were met. I told you swing is very, very important. Swing structure. Don't come on here and look at this tiny pullback. Oh, break of structure. This, nah. Forget about all of this is noise. Look at the swing points of the market. So when the market took out the swing, we saw that we have a order block here. We have fair value gap right here in our nose. It's just there. Then we had a break of structure to the upside. Then we had liquidity here that had not been taken out. When this market was pulling up here, I was scared it was going to take this out, then I'll invalidate my trade, but that didn't happen. Then the market instead built liquidity here, which made me really happy. Then I was like, I had even more confidence in this trade because if this market were to take that liquidity, this is exactly what will happen. And that happened. It just spiked down and boom. When it fueled up, it just flew. So that was it for that trade. Let's continue breaking charts.
Okay.
So where are we at now? We have, let me come back here. We have a swing low. We have a swing high here because this pullback here wasn't really 50% of this price leg. So this is not a valid pullback. To me, this is just an
Yeah.
entire swing, all of this. So we have a high, we have a low, we have a high. This is a good pullback, but it didn't break structure, so it's still it's just a swing, continuing down. Continue that. This is a valid pullback. We had another pullback here, which is 50% of this price leg, which is good. Breakout structure to the downside, nice. We do really have another block here. Then we had a change of character to the
Wait,
upside.
wait, 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 wait. Just go back there to the other one.
This one,
Yeah,
this one.
just go from where you have that top trend line, where you have that liquidity there on top, the
Okay,
top
let me.
trend line. Yeah, there, from there.
Okay, there. This is our high. This is a swing. This is a swing low because it has a nice pullback here up to 50% of this price leg.
Yeah.
So
Okay.
this, yeah, this is our pullback here. Then we had
Okay.
another extension here. Then we had this one, this swing. These are all swing points that I've just marked out.
Okay.
All of it, swing points. My screen has frozen again. Oh God. My laptop is
So that's a
tired.
change of character there. There's a change of character there on the end.
Good. Yeah. There's a change of character here. That's what I wanted us to see. There's a change of character here. Let me get this off and clear my
Yeah.
charts. Okay. We have a change of character here. Now let's look for inefficiency and efficiency. Let's get this out of the way. My laptop screen is really, really slow. Please bear with me. I don't know what's happening
There's a little bit of inefficiency there by that.
here.
Not there, just above it.
Oh, here. Oh, you mean this inefficiency here?
Yeah.
Yes, 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 yes. There is inefficiency here. There's inefficiency here. And I was looking at this one. This is, I've told you when you see this, you have to look for the extreme points first. First of all, validate the extreme points first. You have to first of all check them out. So this extreme point here, we had inefficiency here that was been filled. So this area here is efficient. We don't really look at this area anymore. Then we had another low
Mm-hmm.
here. Looking at these candles on this one, I don't really see any tight spot. The only spot that I can see is the one which you just identified. So this is our order block
Mm-hmm.
because we had inefficiency here. So we can stretch this out like that. Remember our change of character is all the way here. Chuck. And this here is our order block. Oh, sorry. Order block. Right there. Okay. Now that we have this, we have to look for liquidity, right? We
Yep.
need to know what we're targeting, what we're heading to, where we're heading to, and why we're heading there. So looking at this chart here, I can see another block, liquidity. I can see this one, this tiny one here. Then these highs too can serve as resistance to some people, and also see a fair value gap here. Very tiny
Yeah.
fair value gap, tiny fair value gap. So this is the only two. You can see the market is really in our point of interest right here. So we just have to see what happens if we took this trade. Stop losses, I'll just keep it below this week because this week here is just close to this one. I would like to leave that out. Then I'll aim for 1 to 3. Spread price. So at this point, I've already taken some profit off the table because the market has already run more than 1:2. So even if the market pulls back down, I already have some money kept.
Okay. So are you just moving your stop loss?
Now, I'd like to see some structure shift before I move my stop losses. Are you there?
Yeah. But how do you, when they say they take partials, how do they do that?
You reduce your position. Let's say you have a one standard lot open. You go now under one standard lot and you modify the trade. You click on modify, then you like reduce that standard lot. Let's say it's 1, you reduce it to like 0.5. So you've taken 50% off the table.
Oh, okay.
Yeah, you click on the trade, you click on modify, then you reduce the lot size. When you reduce the lot size, you just, you know, that's all.
Oh, okay.
Okay, if I was on this trade, I would have been in break-even trade because it came all the way back to my entry, then went to my TP. Did it? Did it? No, it didn't really make it to my TP.
No, it didn't.
But at this point here, I have nothing to lose. I have some money already, so I just broke even, and that would have been a average trade for me. But you can see here the liquidity order block that we're looking for here got mitigated, right?
Yeah.
Yeah, it got mitigated. But to me, I didn't trade this. The reason why we didn't take this order block is why we didn't have a structure shift. Don't forget that.
Yeah.
Yeah, we didn't have a structure shift, and we have rules, so we have to stick to them. Not every order block is tradable. We are looking for the best possible order blocks to trade from. So this was a good one. It just went back down. If you have any questions, please bring them out. So because this is Friday, I would like that next week at least you should have learned something this week to say, yeah, you've actually gotten something new for this week. Every week you should achieve something. Which is knowledge, very, very important.
Yeah. My takeaway tonight is I'm gonna practice my
Structure.
market structure,
Yeah.
and also I learned how to take partials, which is
Yeah.
also what I've been wanting
Yeah, it's
to
good.
learn.
You can take maybe 50% of your profit off the table once the market hits 1:2 hour. That's the way I do it. So you can choose a way to do it your way. Then you can maybe break even. So stay safe.
Yeah. Yeah.
But sometimes when you break even, you get stopped out in most of your trades because the market will often pull up. So the best for me, I just take my partials and I still keep the trade running like that. It pulls back, then goes up before anything. I like to break even when I see a structure shifts like here. We have a break of structure. Then I can maybe move my stop loss and be like, okay, since we have a break of structure, we're obviously anticipating that the market, if it's coming down, it shouldn't break this low because it's mitigating here and continuing up. That's exactly how we trade. So if the market is breaking these lows, then I don't want to be on this trade anymore. So I'll just have my stop loss at break even.